What's up guys, Josh Olfert back with another video, and today I want to talk to you about the best performing stocks. What would have made you the most money in 2020? So, most stock gurus you see online and on YouTube give you their 2020 picks at the beginning of the year. Well, I'm going to give you my 2020 picks at the end. But as we know, 2020 has been a historic year in the markets. There's been a lot of things that have happened this year that have never happened before. I mean, to see the market drop 33% and then rebound and come up to even and then some. Now, after the election and these different prospects for a vaccine, things are going even higher. It's been absolutely crazy. But one thing to note that I've, noted in previous videos is that a lot of the time, there are a few stocks that really hold most of the market up. And I think we're seeing something very similar to that. So I want to tell you about what were the best stocks. What were the stocks that held up the market this year? And before we do that, feel free to even pause. And I want you to think through, what is it in the market? What themes this year may have made the most money? And I don't think it's that hard of an exercise. So come up with this idea. What stocks may have done the best? I sound like a third grade teacher. My goodness. So anyways, let's think about it. We had a massive pandemic. We were all stuck inside for a huge amount of time. And where I am, we're actually stuck back inside again. We've had, these massive technology companies going on an absolute tear this year. We've had all sorts of different things, but I want to go through what were the main themes and what were the best performing stocks in those sectors and give you a little breakdown of why I think and what the rational take on why these stocks might be doing as well as they are. So first things first, e-commerce. Now this makes sense. I mean, even me personally, I can imagine for you as well, I've been doing a lot more shopping online, and my girlfriend is doing a lot more shopping online too. And all of these things being said, I know people who have almost transitioned fully away from, going to the malls, walking in, having to put the mask on, all this sort of stuff. And now they just go on Amazon and they buy it off there. It's cheaper and it's at your house in 2 days. I actually had an Amazon package that said it was going to be delayed because of COVID, and it came a week early. It was insane. It actually came overnight when it said it was going to be a week late. So it's understandable that e-commerce would do really well in the world we live in today. And one of the best stocks, which I hadn't even heard of this until I looked it up. One of the best stocks was a company called Overstock.com. And what they are is they're a discount furniture e-commerce company. You could think of like a Wayfair or like a, IKEA, something like that. But it's discount and online. That makes sense, right? Because we're in this lockdown period where a lot of people are out of work. They're going to be in their place. And what do they think? I mean, it's pretty obvious that home renovations and upgrading your living space was a reasonable move during this pandemic. Overstock.com. This was crazy when I heard it. One of the best performing stocks of the entire year in the entire world. Overstock went from $7 at the beginning of the year to $54 a share. That is a 671% increase in the price of the stock, and their market cap is now $2.3 billion. This online retailer of furniture is now worth $2.3 billion. And I just wanted to see for myself, because people are buying so much online, what is this doing to their income statement? And this was crazy. Between the first quarter, March, and the second quarter, the end of June, revenue more than doubled. It went from $350 million in sales to $780 million in sales. So we saw the stock go on a tear, and all things considered, it kind of makes sense. Now, online furniture shopping makes sense. I mean, e-commerce in general makes sense. But what about crafts and homemade? The company is Etsy, right? And I've seen my girlfriend scanning around on Etsy, and people have talked about how they buy these really cool trinkets and homemade gadgets off of Etsy. I had no idea just how big Etsy was. This is crazy. Okay, we talked about Overstock and how they did really well. Their market cap was $2.3 billion. That's a lot of money. Etsy went from $45 a share to $132 a share this year. They were up 200% in this pandemic. Now, I'm not sure if that's because people want to decorate their homes with arts and crafts or if they're just more willing to support local creators. I'm not sure what that is. But their stock went up 200%, and they're now worth $17 billion. Did you ever think in your mind that Etsy would be worth $17 billion? That's crazy to me. Same thing for them. If we look at the financials, their revenue essentially doubled during the quarters of the pandemic. So we've talked about furnishing our homes and, decorating them with arts and crafts or whatever it is you guys do on Etsy. What about our work? And the reality is, for a ton of people, they were working from home this year. And this was actually been in the financial circles called the work from home trade. It's a trade big institutional investors and retail traders are making to take advantage of these work from home conditions. And one of the companies I didn't suspect to see in here was a company called Fiverr. And a lot of you guys have likely heard of Fiverr. You've probably seen their annoying ads on YouTube. Not when you're watching this video yet. But if you get me to 1,000 subscribers, you will see Fiverr ads on this video. All that being said, we saw Fiverr stock go from $23 this year to $160. I think that is almost as much as Overstock. That's a 600% gain. And Fiverr, which seemed to be this little tiny company that helped people do freelance projects, is now almost worth $6 billion, which is insane. They've been steadily increasing their revenue, and all of this it does make sense to me, because when you are working from home and when, let's say employers, for instance, don't necessarily want to go through the entire hiring process, small businesses aren't in the financial space necessary to start hiring other people, it becomes really easy to do freelance work. And I think, to my personal experience, I had never really been on Fiverr or looked at it until 2020. And this year I've been on it 3 or 4 times, just kind of browsing around, seeing what's on there, seeing who I can hire to do different projects on a one-off basis. So we're working from home, we've decorated all nice, and what do we need to be in contact with our coworkers? And this is the stock everyone's been talking about all year, Zoom. And I had my Thanksgiving dinner with my family over Zoom. And we, reach out to my girlfriend's family and my friends. When we're in lockdown, we'll go on Zoom calls. And it's just such a natural explanation for why Zoom stock is doing so well. People are saying, analysts, they're saying that this pandemic fast forwarded the progress of things like Zoom and e-conferencing like 10 years, because we had this paradigm shift where now we were all working from home. We needed to be in contact. We needed that face-to-face. And Zoom was really the person sitting there ready to take advantage of that. So Zoom stock this year went from $60 to $428. That's a 500% increase. And when I'm saying this, what this means is if I invest $10,000 in Zoom, I end up with $52,000 at the end of the year. That is crazy. Zoom is now worth $121 billion, and it obviously makes sense how they were such a benefactor of this year. Now, one investment which has an insane ROI and has done extremely well this year, it actually has an infinity % return, is hitting the subscribe button. Because when you hit the subscribe button, you learn all about money and you learn how to do your finance. So other than hitting the subscribe button, what was another sector that did incredibly well this year? Well, it's the one a ton of people have been talking about as propping up the entire stock market. There's this narrative going around that really stocks aren't doing that hot. Honestly, it's mostly just the massive tech companies that are doing really well. And when we think of technology companies and the Robinhood traders who are funneling these retail investor dollars, you probably yourself, if you're watching these videos, looked at some sort of free trading platform this year. You were probably looking at Robinhood or Wealthsimple Trade or one of those different things and realizing, oh my goodness, I can start to trade stocks in this bull market for free. And I can buy stocks in this, when the market drops 33%, I can just jam money into here without having to pay anything for it. And I think that this shift towards free trading has swarmed the market with a ton of young retail traders who love these technology companies. One of the big names for them, which obviously people love to talk about, is Tesla. Now, Tesla is huge. It's one of the really important stocks on our list because Tesla has had the largest market cap gain of the year. It wasn't the largest percentage gain, but they certainly created the most new wealth. They created the most billions out of the rise in their share price. And Teslas are pretty cool. First time I drove in one, it was actually pretty fantastic, but I don't know. Tons of people say they sit in one of these cars and the hype all makes sense all of a sudden. I'm not totally sold personally. I think they're pretty ugly, but hey, the world needs electric vehicles. We're moving towards that paradigm and Tesla seems to be taking advantage there. Now, the big news on Tesla this year is they actually started to really have earnings momentum, because before Tesla was this pie in the sky dream of, this utopian future of electric cars. It was a great idea, but there wasn't a ton of earnings and revenue behind it. Whereas this year, the profits have actually started to show, and they've started to report serious money being made, which means it's no longer just an idea. This is a real business. And what this meant for Tesla was pretty significant. It meant that they were now eligible to be included in the S&P 500. Now, just a quick little backstory. The S&P 500 is the stock market index. And when people want to invest in the broad stock market, they'll buy a fund. They'll buy an S&P 500 index fund, which then has to go out and buy shares of Tesla and Facebook and Amazon and Netflix and all those different companies. But when Tesla gets included in the S&P, that de facto, by definition, means that more money is going to flow into the stock. So when the rumor came out that Tesla might be included in the index, they went crazy. Tesla is up 400% again this year somehow, and they're now worth $400 billion. So that's one of those stocks that tons of people are kicking themselves for missing out on, but their cars are ugly. Now, one of the large reasons that a lot of these retail traders are flocking to the markets is because there's no sports betting. And this is where David Portnoy, Davey Day Trader, got started. Sports betting was down because of the pandemic, and he started speculating in the stock market. And it really popularized the whole thing. But that being said, there is one company in the sports betting, the fantasy landscape, that did unbelievably well this year. And right now, it's Masters weekend. I'm going to admit it, I don't know much about sports. I'm not a betting guy, but I love golf and I love betting on golf, which I only realize now. I am placing a ton of money golf betting, which is horrible financial advice. You should not take that, and you honestly shouldn't be buying any of the stocks mentioned in this video. None of this is financial advice, by the way. But one major company by the name of DraftKings has done exceptionally well this year. And that was really interesting to find out. DraftKings went from $11 a share to $42 a share this year. They're up 291%. You know, they're a $16 billion company, and all they do is fantasy sports and pools and leagues and sports betting, which is really fascinating. Now, a lot of this could be driven by the fact that there was what was called a reverse merger. You know, DraftKings went public just shortly, a brief while ago, and people are piling into this trade. People really like the idea of being able to invest in a fantasy sports company. And the last theme, how could we forget it? If you were to guess what would be the biggest benefactor of this year in terms of a stock market or what company it would be, my thinking would be biotech. It would be those companies that are trying to develop a vaccine. And that is exactly where our winner comes in. Novavax, which is a company that actually luckily was kind of working on a lot of flu-based vaccines, and they found out that their product was going to kind of be perfect for this pandemic. They started moving into trials, and it turns out that the government gave them a contract to produce the vaccine should it end up working out. Novavax went from $4.50 a share to $90 a share, and that is by far our biggest win, taking the cake with an 876% return. Novavax is now a $5.5 billion company. So this is super interesting to look at all these businesses, because if you look at the way the stock market worked in a given year, it holds so much information about what that year was really like. If you didn't know anything about 2020, but you look back on it 20 years later, 30 years later, and you saw that e-commerce took off, you saw that technology took off, you saw that work from home type stocks went bananas and biotech went crazy, you might think, oh my goodness, okay, so they were developing some sort of medicine and everybody was staying at home, and you can kind of derive what was happening in a year by seeing what was taking place in the market. So my takeaway here is none of these are meant to be advice. It's not to make you feel as if you missed out on these massive gains and you should have owned them. Be honest with yourself. Back on January 1st of this year, or let's even think back in the last quarter of last year, a year ago, would you have ever thought to buy these companies? Would you have ever thought a pandemic was coming where you could have bought into these companies and benefited from all this? No, you absolutely don't know which ones. And we also know that over the long haul, almost all of the stock market's wealth that it generates comes from a very small portion of companies. So the message stays the same. You need to diversify, and you need to put yourself in a position where you are benefiting from the market's winners and also not getting crushed too hard by the market's losers. Anyways, guys, I hope you enjoyed this video and you learned a little bit about the markets and what companies did great this year, what the major themes were. If you guys enjoy videos like this, hit that like button, hit subscribe, and turn on post notifications for more videos just like this one every single week. Until next time.